Here's another late development, and this news keeps coming in as we're talking here.
This week is lesson of the week. Instead of the book club, we're doing this every other week so that we get time to make sure that we also learn it ourselves. The question again is the same thing from last time. How do I find stocks to invest in? Last time we told you indicators. This time, another answer is listening to earnings. A lot of you might not know, okay, what is the earnings report? Or those that have might have heard of it, have a good feeling of it, but we're going to give you a little more context and find better ways to go with that. As we're doing the same thing. But basically, earnings report, as we see on Investor P, is pretty much a quarterly filing. I like to think of it as a over glamorized press release that pretty much tells you, hey, this is what we expect for the week going ahead, and they include and talk about different stuff such as their earnings, like just specific financial information that they include in the report called the 10Q. They pretty much tell you how they're performing through these documents, through this press release, and by telling you the numbers of what is going on in the back end. And it's crazy because this was not a thing before, but it became enforced by the SEC as the Securities Commission that kind of oversees the companies that are public. And as a requirement for being public, or we talked about how you go public via an IPO, after that IPO, you have to keep an agreement with the public investors that are buying shares of your company. And this is pretty much what they use this as an outlet. It happens as obviously 4 times a year, every quarter, every 3 months. But the interesting thing is that these companies can decide what specific days they want to go there. So there's like kind of equal control between themselves as a company, but also the public. But before I continue, does anyone else have like anything you want to talk about in terms of earnings?
I don't know if you're going to dig into this, but it's just important for you to remember earnings aren't the end all be all for a company. It's just them having to tell the truth.
That is facts. That's facts. And it's like, that's the requirement. That's actually one of the actual requirements that's literally not an agreement between the SEC and these companies that report their filing. Because as they're doing it, there is legally binding documentation that says, hey, you have to tell us the truth about what is going on with the situation. What do you think is going to happen in the future? You got to review all your financial numbers, such as revenue, expenses, and like you actually have to itemize it. But the bad thing is a lot of people don't really care much to really look into and find out, okay, what are all this information? And that's where the term bottom line comes from, because all of this stuff is like a 20, 30, 50 page, sometimes maybe even 100 page report about, hey, this is what they, and they just try to squeeze it in 1 hour, which is through the press release, and that's available for anyone to listen onto, mainly to attract other investors, but mainly to actually give the information that they're required to give to the investors are the general public. So it is actually required.
Yeah, I can't stress it. And just before you move on, also, you can also use it for more than just money. For example, we know that like PlayStation and Sony are coming out. Best Buy has said that they will have the Xbox and PlayStation 5 in stock this year for Black Friday. But we also now know from their these statements that they've underperformed in getting these things out. So that means there's probably only 5 of these things in each store. So is it worth you running out there for a chance to be one of 5? I mean, risk it for the biscuit. But it can also give you informed information about how things are moving in the real world, not just the stock world.
Right, because like they have people that work within these companies that predict, okay, what's going to happen. And that's why they're so successful, because they plan and predict, okay, this is what's going to happen. So this is how we're going to deploy our money, deploy our resources to actually go become great. So like, I guess, make more money and like eventually drive the business forward. So it's really interesting because I didn't know much about this until one day I was like, I hear all about earnings, but like, I really don't know how it works, what people are saying. A lot of people really just make bets based off earnings, and that's why it's kind of glorified gambling, but it's not a bet if they're telling you exactly what is going to happen and how they're going to make money off of it. Like, they literally tell you, this is how we're going to do it, this is what's going to happen. With this amount of money we're going to make, we expect to do this and that, and this is going to be the result. Like, they literally lay out everything. Or they kind of jump it up a little bit so it's hard to tell, but I think this is really crazy because they literally just give you the whole game plan and tell you how you're gonna make money.
Just follow along.
You really just like follow along. Like just give us your money. You know, you can get a piece of the pie. We give you your dividends. We give you your profits. The value of the stock's gonna go up. It's like they're literally just trying to like sell to you why like they're a great investment. But that's also the bad thing because again they're trying to sell you. So that's why a lot of time I feel like companies get very antsy when it comes to like situations like we're in right now with COVID. Like damn, our earnings are not going to be great. So we got to either push back the earnings report, wiggle some numbers around, or do something kind of like how Tesla did with selling credits. I can't remember what they call it. They're selling credit something just so they can boost their revenue numbers and attract more investors. And that's why one of the reasons, not the main reason why their stock price goes up. So that could be a bad thing if you think about it, because they are trying to sell you. And, you know, when someone's trying to sell you, they only care about them making money at the end of the day. So they can't skew some of the things, but they are legally requiring you to tell you truth. Are they stretching it? Are they not stretching it? It's up to you to decide. And yeah, that's pretty much most of the stuff about earnings. I was reading an article about a 2008 earnings report earlier this week, and it was crazy how similar what they were saying in that article about, oh, stocks are going down, situation is crazy, and we're uncertain what's going to happen next. And that was kind of like during that recession, or sparked that recession. So it's funny how we're in the exact same position 12 years later. In 2020, we're dealing with the exact same rhetoric and things like that.
Yeah, absolutely. And don't be fooled that thinking like, you know, just because someone's telling you something about earning reports can be detrimental to you, because at the same time that you are being told good news, guess who else is hearing this? And this is something that's right. Those press releases can be released at any time. So if you're not on the call to hear it in real time, and that's something I really enjoy, you can be in the call to listen in. So in real time, when everyone hears it, you get to hear. And that 15 to I think the best example was American Airlines. They did their call at 6 a.m. in the morning, 2 hours before the market opened up. So people had time to react if they were there. But the people who wake up at 7:30 and just see the market fluxing, they don't know why, they buy in, and then the crash happened. And that's when everyone lost their money. So don't be lulled into some sense of security because you see the spreadsheet and the numbers are reflecting. Those numbers could be reflecting something that happened hours ago, minutes ago, or days in advance. So it's be on the call. If you're invested in a company, wake your ass up and get on the call.
Yep, but it's crazy. Like as they have full power to change the date and the time. So even if they tell you, because typically they'll tell you, okay, we're having our earnings a month from now. Like within a couple of weeks, you should know when the earnings report is.
But I feel like that's a no-brainer for us. If someone pushes the call back, that's bad.
Yeah, and think about it. That's what happened earlier this year when COVID happened. The scheduled earnings, people were like, hey, actually, we're going to postpone it another week, a couple of days. We're going to move from the morning to the night. Yeah. Because when you do it in the night after the market closes, there's less time for people to react and less chance of the stock
dropping. I think that should be a standard. They should only release the numbers after the market is closed.
I think it's becoming a standard. Like a lot of companies are starting to do more and more. It's very rare, and if you pay attention, it's not really rare, but it's less frequent when they're doing in the mornings. Like everyone's after hours. Like we know how like we've been seeing talking about when are the earnings during our calls. Like it literally always, most of the time when I'm putting it is okay after close. So it's interesting. Like they can that, and it's interesting how they time it.
When I see stuff after close, it kind of makes you worry. You know, like okay. When I see after close, that means it's gonna be volatile either way because they don't want things to go crazy. Like let's put it after close,
right?
Or maybe they just could want a full day of trading. Like they could want a full day trade. Like I'm not calling everyone sus, but it's your money, so I'm always going to advise you to double check everything.
Definitely, and I think there's been something interesting going on in the market in terms of earnings. I like to call it the earnings trap, where a lot of people, they'll buy in a couple of weeks leading up to a good earnings report, maybe 2 to 3 weeks before, and the stock slowly starts going up. But then with the day of the earnings report, at the last hour, it starts to either drop or move up, depending on how they want to signal to get more people to get in.
Victim to that.
The market closes, that shit just crashes like 2%, 3%, maybe even more.
Yeah, I've fallen victim to that.
So I think it's something big going on in terms of that. I think that's a new strategy that a lot of the bigger financial institutions are doing, where they manipulate the markets right at the time of earnings. And that's why I've been avoiding earnings reports, mainly because I don't want to be staying in them while the earnings report is going on, or I can use that as an entry point into a stock that I'm looking at. So same thing happened with me with Chegg. I saw, okay, Chegg's been going great. They've been like, I've been hearing all my friends in college talking, oh, I'm using Chegg. I'm using Chegg. And it's like, okay, they're getting a lot of people, customers. And so that means they should be making money. So I was looking at, okay, they have their earnings in a couple of weeks and I support their product. I looked into it. I was like, okay, I'm gonna buy into it now, let it rise up. Then I'm gonna sell the day before the earnings report. And I think that was on Tuesday last week. And I was able to sell it before the earnings report, before the market closed. And I locked in 12% profit on like a 2-week trade, maybe less than 2 weeks. And that's like a great opportunity because afterwards it crashed like 5%, but I think it did rebound the next day. But it's like, I don't want to take that risk. So I'm just going to lock in this profit and move on onto it. So that's the new strategy I'm trying out. I call it the earnings trap. So I'm going to copyright that, let y'all know how that goes when I print the book about it a year from now.
The other day, was it yesterday or 2 days ago? I was watching Wolf of Wall Street. And I've seen the movie before, but I never saw it like while I was trading, and I didn't understand the full market. So after watching it, now that I understand the stock market, side note, the movie's great now. Like it's even better now. But when you actually understand what they're doing and things like that, and it goes back to when we were talking about like the influence of social media, stuff like that with stocks, like that movie kind of helped me understand a little bit about like how people will push up a stock via social media, like with tweeting this, like. For example, there was, when the Bolivia thing happened where Tesla missed out on like the presidency change or like that. People were saying they weren't going to be able to get their lithium like they were supposed to, even though that was completely like not true. But because on social media, people were saying that, people like who don't really know a lot about trading and how it works, they just saw that tweet and were like, yeah, their stock's going to go down. And that made it go down more than the actual thing. Just the thought that people thought it was going to go, like the fact that misinformation was passed along via social media cause people to react. And that just made me like think about like how trading in this age of social media and things with like Robinhood and TD, how everybody has access to it, how misinformation can really change a lot of things and make things fluctuate. So that's just a side note, something I picked up while watching the movie.
Yep. I think that movie really gave a lot of insight.
Yeah.
Into like, what does it really take to like invest in stocks and things like that? Although they focus on penny stocks, is still a lot of overlap. There's still a lot to like gain from that. So that's definitely a must watch.
Definitely. Like there were scenes in the movie where he was like, I'll explain it. Like, never mind, you don't care. I was like, no, I care. Explain it.
Facts.
Yeah.
That's crazy. Have you watched that movie, Heero?
Yeah, The Wolf of Wall Street. It was made by the same director that made another movie similar to that, where it's like it's all about getting people to realize it's this satire about something that's super important, but everyone takes it as a joke. And I think the one that I'm thinking of was talking about like the election. So I always just tell people like, don't get it full of yourself. Understand if there's a joke about it, there's some truth behind it.
What did J. Cole say? Every good joke has some truth in it. That's what J. Cole said. Yeah.
Word to J. Cole.
All right.
I bet. And that pretty much covers our lesson of the week. Talk about earnings. Let me think. Is there other ways to like understand how to invest? Well, that's pretty much the main strategies.
Well, I mean, I think you covered it, one of them, but just the two things. Like one, you can go in with the expectation of using this information to make a profit, or go in with the expectation of how to secure your profit, because dividends come out shortly after these calls. So I know whenever I see a call day for one of my stocks, I'm selling everything. I don't care if they had good numbers, because when dividends go out, then it drops anyway. So that's my buyback period. So just create a strategy and talk about it. Talk to your friends about it, because people will tell you if your shit is done.
No, fact. And that's actually a great point. And I feel like a lot of people don't do that enough. And that's pretty much one of the main reasons why we all started this podcast. So like we can have those discussions about how to play these earnings and things like that. I remember one of our initial strategies was, how we're going to play earnings, things like that. and we've all evolved and tried different strategies because all strategies are different. Different strategies work for different people. So definitely come up with a strategy about how you're going to play these things and have those conversations with other people to see, okay, does this make sense or does this not make sense? So I think that's a great point, because as they're releasing this information, that's the only way you're going to get the information, by having those discussions, really. So it's a game of information, honestly, to me. But that is the lesson of the week, going over earnings reports. Before we jump into what happened in the past week in this, definitely check out again the book that we discussed last week. We read chapter 1 of Calculated Risk by Kevin Trades. We still have the discount code on, so definitely use TradeTribe with discount code, get 15% off the price. It's a great read. We're going to discuss the second chapter next week, and I'll be talking about options trading. Now, everyone is talking about, okay, how do I get into options trading because you want to make money? This is how we're learning. We're learning by reading books and things like that teach us how to do it.
I've already started reading the second chapter, not to spoil, but to revisit the Greek was very useful to me.
Yes. I took we gonna have a whole discussion about theta one-on-one.
Theta was a reminder course. I was like, fuck, yeah. Theta and decay. Oh,
yeah. So if you want to learn more about that,